Hello and welcome to Swag Academy. Monish Pabrai bought the company Group 1 Automotive. The company makes 4% of his portfolio. In this video I will make an in-depth stock fundamental analysis of the company Group 1 Automotive to find out why Monish Pabrai bought it and if it is an attractive business and stock. I will cover its history, business model, growth, balance sheet, profitability, management, dividend, valuation, and finally do the 3M analysis. So make sure to watch till the end of the video. Group 1 Automotive was founded in 1997. Its headquarters is in Houston, Texas in the US. The company has $4 billion market cap. Its stock is trading around $295 at the time I'm making this video. Group 1 Automotive is an automotive retailer with automotive dealerships and collision centers in the United States and the United Kingdom. Group 1 sells new and used cars and light trucks, arranges financial services, provides maintenance and repair services, and sells vehicle parts. As of 2021, the company employs over 13,000 people globally. The company has 148 dealerships in the US in 17 different states. They also have 55 dealerships in the United Kingdom. Group 1 Automotive grew its revenue from $9.9 billion in 2014 to $16.87 billion in 2023. The revenue is constantly growing the last 10 years. The only decline was in 2020 due to the pandemic. So it is safe to say that Group 1 Automotive have a 5 to 10% growth every year. Now let's break down the revenue. 49% of the revenue are new vehicles sold. 34% are used vehicles sold. 13% is parts and services. And 4% is for finance and insurance. So it is safe to say that Group 1 Automotive have a diversified revenue streams. Now let's check the profitability of the company. The gross profit is the result of revenue minus the direct cost to create these revenues. The gross profit margin is the result of gross profit divided by the revenue. The gross profit margin shows the amount of profit made before deducting selling, general and administrative cost. The gray line in the chart represents the gross profit margin over the years. Group 1 Automotive gross profit margin is around 17%. It is nice to see the gross profit margin increasing with revenue increase. This means that the company have a good operating leverage and will have more profits with the future revenues. Now let's break down the gross profit. As you can see in this chart, parts and services have the highest gross profit followed by finance and insurance. So although the company makes less revenue with parts, services and finance, this is where the high earnings come from. Next, let's check the operating profit and the operating profit margin. Operating profit is the net income derived from a company's core operations. It is the amount of money that a company has left over after meeting its operating cost, but before paying its taxes. Group 1 Automotive made around $1 billion in operating profit in 2022 and 2023. So operating margin is around 6%, meaning for every dollar revenue the company sells, 6% are left as operating profit. Now let's have a look at the free cash flow. As you can see, the chart is all over the place. This is because Group 1 Automotive is using its cash to invest in the company. This is a table showing where the cash of Group 1 Automotive is invested. The company makes acquisitions of new dealerships every year. They bought 11 franchises in 2022 and 2023. They paid dividend and made share buybacks. They paid $521 million for share buybacks in 2022 and $173 million in 2023. Furthermore, they tend to buy the real estate of their dealerships. As you can see in this table, 139 dealerships are directly owned by them. 63 are leased. In this chart, you can see that they are buying dealerships real estate every year. So the company is making good use of the cash at hand. Now let's have a quick look at Group 1 Automotive balance sheet. Group 1 Automotive have $57 million in cash. Its total current liabilities are $2.5 billion. The total current liabilities are the liabilities which the company must pay within 1 year. Group 1 Automotive long-term debt is around $2 billion. So the balance sheet does not look so good. The current liabilities are high and the company must pay them within 1 year. Furthermore, there is long-term debt. This chart shows the debt maturities. Considering that Group 1 Automotive have $1 billion of operating profit every year, they will easily be able to pay their debt in 2024, 25, and 26, and have enough money to reinvest in the company and buy back shares or pay dividends. However, they will be short on cash in 2027 and 2028. The debt to operating profit ratio is 4, meaning it will take the company 4 years to pay back its debt. I find everything below 2 years is okay. 4 years is too much for me personally. However, this debt is wisely invested, as discussed before, to buy real estate, new dealerships, and do shares buybacks. So to summarize, the balance sheet is loaded with payments and debts. However, Group 1 Automotive should be able to handle them and is wisely using the debt money. Now let's jump to valuations. Group 1 Automotive have a 0.22 price to sales ratio, a 6.97 PE ratio, a very cheap 5.57 price to free cash flow ratio, and a 1.44 price to book ratio. Pause the video and check how the current ratios compare to previous years. Now let's do the discounted cash flow analysis to determine the fair price and intrinsic value of the stock. This is how my model works. I calculate the worst case scenario to determine the downsides, a normal case and best case scenario. The first column represents the growth rate for the next 5 years. The second column represents the growth rate for the 5 years afterward. The third column represents the terminal multiple or the PE multiple at which the stock will be sold in 10 years. The fourth column represents the discount rate or the rate of return the stock will grow over the years, considering a 10% growth the first 5 years, a 5% the 5 years afterward, a terminal multiple of 9 and 15% discount rate. The intrinsic value of the stock is $201.73. Group 1 Automotive is trading at $295, slightly above the intrinsic value. Finally, let's do the 3M analysis. 1M for moat, 1M for management, and 1M for margin of safety. Group 1 Automotive have a good moat. People who buy a new or used car from them will likely do the service and insurance with them. As discussed before, management is doing a great job buying real estate, new dealerships, paying small dividends for investors, and buying back stocks. The stock is trading above intrinsic value based on my conservative assumptions. The balance sheet is loaded with debt. Before I give my opinion on this stock, let's check what analysts think of the stock. Most analysts recommend to buy and hold the stock. Analysts' price target is $340, which is above the current value. So based on analysts' estimates, there is a little margin of safety. In conclusion, I can see why Monish Pabrai is attracted to the company. The company have a good moat, is growing and increasing their top and bottom line. They pay dividends and are buying back shares, which is very good for shareholders. Should you buy the stock? Well, I personally would buy it if it goes below the intrinsic value of $201. Let me know in the comment section below what you think of the stock and if you are considering buying it. If you found value in this video, please give us a like. This helps a lot, and consider subscribing for more videos. Thank you very much for watching.